The Executive Chair TV reality show.
1, 2, 3. The 3 people are spotted. Do you have a signature? You have a signature. You have a signature. Take it. Sign your signature there. Nobody should change their signature, right? Sign your own person there. On that. Yes, that's your signature. We have all seen their signatures, right? They cannot change it. Now stand here. Who did the first? Cecilia, you have to sign that now with your waist. That same signature. Show us how you did it. Okay, go ahead. The next is who? Abenti, sign your signature. Are we sure that's it? That's all? Okay, go with your own. You're there.
Make it straight like 2 dots.
Okay, let's clap for them. All right, take your seat, take your seat. Abaka. Okay, this is what we are going to do. Today we are going to talk about accounting fundamentals, the basics. We want to teach accounting because accounting is the one of the key aspects. I told you for the last time that we have done marketing, we have done global strategies, we've planned create values, we have designed a business model. Right? Now we want to do accounting itself. Accounting here, I'm not taking you people to become accountants. I want to give you basics. This word, fundamentals, is the basis of accounting. Okay? Now we want to see the use. Why is accounting necessary in business management? How do we go about it? I told you last time that before you start anything, you first of all look for what? The what? Why. You look for why before you start going into how. Okay? Why do we need accounting? We want to empower small businesses. Alright? First of all, we are not doing the major accounting like you become a certified chartered accountant. We just want to get basics in accounting so that you can know how to empower small businesses. They can make financial decisions and all of that. What are the objectives?
Understand key concepts, learn to track financial transactions, explore avenues for financial management.
All right. Now that is the objectives of what we want. Okay. By the end of the class, you should be able to do what? Understand the concepts. The next point, you should be able to do what? Learn to track financial transactions, and then you should be able to do what? So by the end of this class, we should come back to see if we have an idea, right, to do those. Those are objectives. Now, for us to get to that, this is a structure. We first of all have to define what accounting is. Alright? We define accounting, we understand the key components of a financial statement. We need to understand the key components. Then in there, these 3, income statement, cash flow statement, and balance sheet, are the things we are going to talk about because those are the components of the income statement. But we will lay emphasis today on the income statement. Because after understanding the income statement, it's going to give you enough knowledge about this. We can use that and understand this tree. So that's why I choose to lay emphasis on the income statement. Okay, so why is it important? First of all, it helps to track financial health. The health of your finances. Is it in good state or is it in bad state? You can think that you're selling, but you're not making profit, right? But without accounting, proper accounting, you will not know if your company is actually in a good health or not. So you will see why it's important to understand the accounting. Secondly, it aids in decision making and growth. You should be able to know that as of now, I want to invest. I want to take out profit and go and use dividends. You cannot make those decisions if you don't have a proper accounting system. I want to recruit one more person in my company. How do you make that decision? Are you able to pay one more person salary? Right? You can only know those decisions if you have a good accounting. So those are the importance. That's how important for you to be able to manage your accounts properly. Okay? To ensure compliance and tax readiness. Because the tax people in our country always come to you and they can tell you that you need to declare like this, you need to do this. If you don't have a proper accounting, they can fool you. If you don't even understand the accounting, they can say, no, I think it's bad, just give me 500,000, let me close it for you. Meanwhile, if you have to do your accounting, you could declare that for 50,000. John, read me that word in Italics.
Accounting is the language of business. Understanding it empowers success.
What does it say? Let's go again. Let's get it loud. It says accounting is the language of business. Understanding it empowers. It means, what is the language we are using now? English. Simple. What is the language we are using now? What is the language we are using now?
English.
Okay, it's the language. So I use English for you to understand me, right? Business use accounting as its language. If you don't understand it, you are so weak. You are not up to succeeding. You get it?
Yeah.
You get it?
Yeah.
We enter into the core of the thing itself now. We have seen the structure. We have seen the objectives. Okay? We've seen the structure of how we want to go. We will know the importance of it. Why is it important? We have tried to level the importance of it, right? So why is what's important? This is where we are. This is the core of it. Accounting.
Accounting is the process of recording, classifying, summarizing, and interpreting financial transactions and events.
Okay. What did I tell you how you study? I said when you're studying, right? In everything that they say, there is literature in it. There are some keywords. Do you understand? There is a language which is English inside, but there are keywords. Process. Before we start getting this one, of what?
Recording, classifying, summarizing, and interpreting.
Alright? So you have to record, you have to classify, you need to summarize, and then you need to interpret. Somebody came to my shop and bought something, I record it. Alright? I classify it. Do I classify it under the sales of this or that? I've recorded that I've sold 300 francs, right? So I'll classify it under beverages, under whatever.
Today's sales.
The day sales. I classify what I have sold. Let's understand this sentence perfectly. So accounting is the process of record, classify, you summarize, then you interpret.
Its purpose is to provide useful financial information to stakeholders such as business owners, investors, and regulators to help them make informed decisions about an organization's financial health.
This sentence is straightforward, right? Claudette, are you with me? I want you to be with me, okay? Now, we have seen the part of the definition. It comes and tells us the reason. Financial information to stakeholders. We talked about stakeholders here before, right? So we are providing stakeholders, and every name the business owners. Business owners need to know, right? What is the financial health of the company? How much money is entering? How much money is leaving? This is a business owner. You sell flour, right? You sell fufu, okay? When you put that, you to make decisions. Which one should I increase? Because you see that this is the one that is selling more. So you need this information on when every sales is coming. You need to get that information to be able to make decisions. Understand? So the business owner needs information to be able to make decisions. And this information is on the transactions that happen, the financial transactions. When the transactions go on, then the business owner can make a decision because he sees the transaction. Read number 3.
It typically involves things like tracking, tasks like tracking income and expenses, preparing financial statements, and ensuring compliance with financial regulations.
This big word, financial regulation, is not just about things like taxes. Okay, so don't get yourself confused. Okay? Now, in business, look at me. There is income, there is expense. Income, right? Everything that comes in is what? Do you understand? Income is what comes in. J'ai fabriqué les choses, c'est cela. Quand je sors, si je dois aller faire marketing, c'est expense. Parce que je dois payer pour qu'on me fasse ça, je paye pour qu'on me donne des t-shirts, je fais ça, c'est expense. Mais quand je finis, on commence à acheter. Quand tu encaisses, everything that comes in is what you call income. So when you are classifying your record, everything that comes in, this one came in, this one came in. So you put in every income. And then you go on another sheet, right? Everything that goes out, these are all the expenses. You see how you're classifying it. You need to know every income and every expense, right? The tracking income and expenses, then you prepare the financial statement. You can only prepare the financial statement when you can track your income and your expense. Steve, ça va? Is it true? Good. We were talking about key components of accounting. In the beginning, you remember? This is us now in the body of our lecture. We're seeing the key components. But we are going to center on the financial statement. In our structure, we talked about it, right? The key component is bookkeeping, financial statement, and budgeting. What is bookkeeping? Daily transaction records. In every small cafeteria, small shop, small boutique, the basic thing that everybody does accounting is what? Bookkeeping. You have a book where you write in. J'ai vendu tel. Tout ce que tu vends par journée, par quotidien, tu écris là-bas. C'est ce qu'on appelle bookkeeping. Keeping the records. n'est-ce pas? Il est entré, il a acheté pour 10 000. J'ai payé le taxi de 500. Alors que tu écris tout ce qui entre et tout ce qui sort. That's you keeping all financial daily transactions. Get the records of daily transactions. Per day, you get the records. I write this down. Now, in the financial statement, you get those three: income statement, cash flow statement, and the balance sheet. This is where it's a little complicated. That's why I'm taking my class here. Because this one is bookkeeping, it's just writing now. Right? This one is when, if I start asking questions on this, we'll start getting a little, what is that? That's accounting now. Who can agree with me? Right? This is where we should get knowledge. If you are business executives, you should at least understand this. You must not be certified accountant. We are not training you here to be accountants, okay? But you must have an idea, know how it works. This is a business language. What we say accounting is the language that is being spoken in. It's a business language. So you cannot be called the business executive when you cannot speak the language of business. Okay? So basically, this is what we said that. Then the budget in here is income and expense planning. For you to plan all what is coming in and how it's going out, doing the planning. But after understanding this part in the middle, that's where you can budget. Previously, we looked at what profit is all about. That's us trying to see the structure of the income statement, right? And in the structure, the first definition is profit is income minus expense. This is what you should put in your head, because before we start going down, if you don't understand that this is equals to this, then we cannot continue. The rest, Saba, income minus expense for us to get what? Profit. Now, in the structure of the income statement, there are different profits. Before you finally get a profit, which you say this is my money, there are different kinds of profits. So we are going to look at those different kinds of profit before we are going to see the full structure of how an income statement is supposed to be presented. Okay? So let's jump to that. There are 4 kinds of profit in an income statement. 4. To get an income statement finalized, you must have 4 different kinds of profits. So the first profit is what they call the gross profit. The gross profit. The gross profit here, if you look well, the total sales minus direct cost of production. What they say profit is what? Income minus expense or cost. So where is the income here? In this sentence, what is the income? Total sales. That's the income. The sales minus what?
Direct cost production.
So that is what you have your gross profit. So there must be income minus expense, cost of production. How much did I spend to produce this directly? I bought the bottle, I bought the cup, I did the plastifying, right? Okay, I spent in drilling the water or something in here. The direct cost for this to happen. Do you get it? Direct cost is cost of raw materials. Every cost directly related to this being produced. Do you understand what direct cost is? Okay? So I sell it, I spent 50 to produce it, then I sell it for 150. So my gross profit is how much? I spent 50 francs to produce it. I sell it for 150 francs. What is my gross profit? 100 francs. Yes, so we see that's the gross profit first. But is that my profit yet? Not yet. Okay? So gross profit is first of all you minus just the direct cost of you producing that thing. From how much you sell it. Gross profit. Sales minus direct costs. Is everybody with me? If you are not with me, blink. Cut me out. What we call operating profit. What is it? Profit from business operations. That is what they call indirect costs. What are business operations? Now, let's go back here. My direct cost is I bought the bottle, I bought the cup, I bought the labeling, chill the water or something, right? I put it inside. The direct cost is that. Okay? Indirect cost. For this to happen, I pay salaries. There are costs that I incur for the business operation, for the business to operate. I pay lights, I pay water bill, I pay telephone bills, I pay transport bills for the workers. All those different costs is what you call the indirect cost, which is costs generated from business operation. So I have one. Your operating profit now will be your gross profit minus your business operation. Coming in. I have sold. Right? In our example, we said we have a gross profit of what? 100 francs. That's the example we made. Our direct cost was 50, we sold for 150. Come to me, follow me. I come here. The sales. How much did I sell? We said we sold for 150 francs. We sold for 150. Right? The cost, direct cost. Right? This is our statement. Now, the gross profit. Gross profit is what? Do you get it? From the first, we understand, right? Gross profit is sales minus direct cost, which is sales minus direct cost, which is 100 francs. Up to here, everybody is getting it, right? Okay? Now, the next thing we want to look at is the operating profit. But before we get there, right, we'll have what we call operating expense. How much do we spend? Right? In the transport, generally. Because if we produce 10,000 pieces of that thing, we would have sold much, right? So in every one piece, how much we spend locally for our operating expenses? Let's say we spend about 30 francs, right? If you divide all the salaries, you will get it. If I sold 1,000 bottles, it's going to be what? 150,000. Right? If I sold one, the sales is 150 because it's just one. But if I sold 1,000 bottles, it means I have sold 150,000. Right? So if the salary of, the operating expense in that 1,000 sales is 50,000, for example. Okay? So if I want to get the sales, the operating expense for one bottle, I'll divide it, that can give me about 30 francs, for example. Each bottle, I must have cost my operating expense is 30 francs in each bottle. Do you understand where I'm coming from now? Right? So we come here. Our operating expense we put in 30 francs. Yes. This is all of this is per bottle. Right? So now our operating profits is what? Just keep minusing. Gross profit minus operating expense. So our operating profit is what? 70 francs. This is income statement we're already building. Operating profit is 70 francs. We'll see, don't worry. Up to what we said, operating profit, we're touching it, right? Now, EBIT, as they call it in accounting, what you see, they say EBIT. Earning before income tax is what they call EBIT, EBIT. Most of the time, your operating profit and your EBIT is the same. Because there are two things that are inside the income statement, in between them. Follow this step 1, 2, 3, 4, 5. Number 6 step is that we're going to put what they call non-operating expense, which is most of the time to know. What is non-operating expense? Before I started my business, for example, I took a loan, right? I took the loan, and the bank asked me to be paying back 10 francs. In this world, they are 50,000. Or asked me to be paying back 10 francs every month. That is money that goes out from my account every month, which is not directly involved in my operations. It's not my salary, it's not. So that's what we call non-operating expense. Expense that the money you spend, which is not directly linked to your operations. So sometimes people prepare a monthly income statement, right? So they will put, if they have non-operating expense, if you have it, you're going to put it there, which is maybe paying back of loans and all of that, which comes after the operating profit in the income statement. You get it? Then there's also operating income. Also income that the company generates, which is not from sales. A gift to the company. Money can come to the company like a gift, no, that's income. I'm not talking about expense. Or what gets into the company. Expense, salary expense is under operating expense.
I mean, your salary earner and your business owner and...
No, we're talking about the business, right? Income that comes, this is the income of the company, it's not of a private person. Right? So how much money gets into the company and how much money goes out of the company? Right? You get what I'm saying? The company decides to go and do in their extracurricular activities, they decide to go and play a tournament. And then they win a trophy and it's being compensated by money. But it's a company that sells water. That income entered the company. It's not directly linked to their operations. So there are some months where you can have a non-operating income which goes into your income statement. Now the EBIT that we just talked about, earning before income tax, will be what? Operating profit plus and minus. You plus the income minus the expense. Wait a minute. This is my operating profit. It's what at 70 francs. Right? Right? If I had a bank loan that I'm paying back 20 francs, I will minus it from, because that's an expense, right? I'll minus it from the 70. Yeah? If somebody dashed me another 25 francs, I will plus it to the 70, right? Before I get my earnings before income tax. That is, I will plus all the income that I had, which is non-operating. I will minus all the expenses that I have. That's the plus and minus. You plus the income, you minus the expense. And remember, I told you that most of the time your EBIT is the same like your operating profit, because this non-operating most months you don't have them, it's zero. You get it, right?
Yes, sir.
Most of the months, there is no non-operating expense and there is no non-operating income. So on your income statement, those things are zero most of the time. But there are some times that they might not be zero. So you have to reflect on your income statement. So let's take our own year to be 00. Is everybody with me?
Yes, sir.
Figure, what is our earning before income tax? Why do you say it's 30? It's still 70. It could change if we had some figures from the non-operating or the operating. You could get it. So here our EBIT is 70 francs still. That's the income statement. The income tax is what? 3.85 francs here. So now our next profits. The EBIT minus. People have seen that income statement is easy to produce, right? You just keep minusing as you are going down. Which is how many?
66.15.
How much? How much?
66.15.
Now this is your money. We have made a strategy here that permits us to maximize profit. Now, assuming that here was 80, which means that we had high salaries, we had high electricity bills, high water bills, the operating expense will increase, right? So you see that it's minus 50,000 here, we would have been making what? 16 francs as profit. So when you are doing your management, you want to maximize profit, you can see it from your income statement. We had our operating here is 30. Because our operating is 30, our profit from sales of 150, we make a profit of 66 francs. And next profit, business executives. Are you with me? Numbers. Number way. Numbers.
80 is what?
Okay? Once have a go. Let's show ourselves. The ones go on one side, the twos go on another table. Today is we have two companies, and in the two companies, you guys are going to give me the name of your company, and then you are going to give me what you sell, and give me a monthly income statement, right, of what you have sold. Let me see the income statement. Remember in our last class, we talked about midterm financial plan. True or true? We talk about global strategy and midterm financial plan, right? This midterm financial plan starts by you giving me the income statement of the year. It can be the month and then the year. And projects me an income statement for a month. Do you understand that? Is that doable? Our sales will be like that. I want to see at the end, I want to know that that business is profitable, right? I can only see that it's profitable if you speak the language of business. That's what we said, right? Accounting is the language of business. So tell me whatever you're saying, put down the small marketing strategy, and then give me the income statement. Let me see if that business is profitable. Make it monthly sales. For example, don't put me sales of 150 francs. If you tell me that you're going to sell 10,000 packets per month, right? It means you've sold 10,000, it means you're having 1.5 million sales. In that 1.5 million, how much was your direct cost? In that 1.5 million, how much did you spend as salaries and everything, operating expenses? You get it? Consider taxes to be 5.5%. Let's consider the tax to be 5.5%, and then you guys should do me an income statement. We have 25 minutes for that exercise. Think very well, and then you start working. Over to you.
What was the gross profit? What was the gross profit there? What was the gross profit?
The gross profit is 1.9.
Operating profit minus it.
Net profit 4,750 minus 2,267.
Who is the leader? And this is who is writing. Who is the leader? Lovett is the leader. Book 2. Who is the leader? Venance is the leader of book 2.
Yes, sir.
Venance, come outside. Lovett, come outside. That's all I want from you as a leader, right? Generally, how did it go in your group? How did the other teams participate? The other members in your group? How was it? What was the atmosphere during your working session?
Alright, for a start, things were not so easy from doing all of the activities. We had to understand the activities, and it was quite a challenge to get our heads together. And even when we started, some of the members were not in line, some were lost. So regarding all of that, we had to make sure that everyone was on the same page before even commenting the activity we were given. And when we were on the same page, even though we had a little bit of disagreement, because we don't have to work as a group, everybody has to be in line. Even though we had some little bit of disagreement, but at the end we came together, choose a business, choose a plan, choose a strategy, and we got through everything perfectly.
All right, thank you. Let's give them a hand. At least what they did is they succeeded to put themselves together, and they promised that they have something which is good for us. Let's clap for Group 1 again. All right, Group 2, tell me, how did your group of finance? How did you go about it? Generally, how was the working environment? That's all you need to tell me.
Moi, c'est finance. Nous avons très bien travaillé. Malgré les petites difficultés, il fallait une compréhension du texte et nous expliquer. Et nous sommes bien en sortie. Nous avons très bien compris le texte à la fin et nous allons vous présenter un bon travail.
All right, Group 1, can you make some noise for your group? People should think well, who is their spokesperson, okay? Think well, because you see, Group 1 is already trying to replace their spokesperson because they want to, okay. So you're going to explain to me your concept, and then you back that concept with the income statement.
Okay, so our business is The name of our company is Agro Plantain Enterprise, and we deal with the buying and sales of plantain. We source our plantain mainly from Zico and other related markets, and we sell it in Limbe to other businesses. Okay, so this income statement here shows our projection for the month. In a single day, our business sells 50 bunches of plantain to other businesses. And so in a month we sell 1,300 plantain, which gave us a sale of 3.9 million per month. We buy our plantain, we sell our plantain for 3,000 francs in the market, multiplied by the number of plantains we sell per month, 1,300, it gave us this amount. And then we buy our plantain inside the farm, and we buy for 1,500 francs per bunch. And we sell 1,300 per month. So calculating that gives us a direct cost of 1,950,000 francs. And so we had a gross profit of 1,950,000 francs. And then now we move on to operating expenses. This is a summarized version of all of our expenses. Our expenses include salaries, maintenance, salary, and others that include insurance for our vehicles. Now, we own our vehicles, and so we spend about 8,500 francs per month on because we use about 3 liters a day. On maintenance per month, we spend 30,000 francs on the vehicle, and salary we spend 250,000 francs. So we have 4 workers, 3 harvesters, 1 driver. Mainly, those are our main customers. So, adding all of that gave us our operating income, our operating expense of 538,500 francs. And so we had an operating income of 1,411,500 francs. We come down to our non-operating expenses. We took a loan from the bank in order to start our business. And the bank charged us 50,000 francs in interest rate per month. And so we added that as our non-operating expense. We never had any non-operating income coming into our business for the month. And so adding all of that gave us an EBIT of 1,361,500 francs. We had an income tax from the government of 5.5%, which when calculated came out to about 75,200 francs. And 215.5 francs to be specific. And so our net profit came to about 1,286,287.5 francs, which shows our business is very profitable and a more than 30% net income on our business, showing the vitality and the profitability of our business. Thank you.
I have seen a business which has the possibility of having a net profit of about 30%, right? About 30% of their sales. Now, what is the strategy? I ask you to design a marketing strategy. What is the strategy that would permit you have that particular number of sales and have that particular number of your direct cost so low?
When we harvest, we don't only target wait for orders. We actually go out there into the local market. We work with the presidents of the market and see those who are in need of plantains at that particular time. And when we come with our goods, they are actually ready to take instantly from us.
Okay, Group 2 has some questions for you before they come on. Yes, any question for them?
Bonjour, moi c'est Venance. Moi je voudrais poser une question. Vous avez dit que vous avez les plantations, c'est vrai. Mais il y a une saison où il n'y a pas de planteurs. Comment vous faites? Et s'il arrive qu'il y a le vent, comme par exemple il a pris des romans, presque la totalité de tous les planteurs sont tombés. Comment allez-vous faire? Surtout ceux qui ont produit. Comment allez-vous faire?
Planting is seasonal, but with crops like plantain, you can do shifting cultivation, and you have customers that plant according to their season. And you know that if I have this farm here, and I have this farm here, and I have this farm here, that I buy here this time, I buy here this time, I buy here this time, I always have plantain in my farm.
Representing for Group 2, complete name is Agro Farmhouse we're involved in the production of, the farming of pigs and the production of meats and meat products. Our sales is 1,200 kilograms. And here a kilogram is 1,500. So in a day, we sell 1,200 kilograms daily. For 24 days, exempting our rest day, projected 24 days, which will give us, in a day, we sell 28,800 kilograms, which is 43,200,000. Our direct cost is 2 million. Our gross profit is 43,200,000 minus the direct cost, which is 2 million, which will leave us at 41,200,000. Sorry. Operating expenses is at 1 million. Our operating profit is at, we minus the gross profit minus the operating expenses, which will leave us at 40,200,000. Our non-operating expenses, because we got a loan from the bank to start up our business, and monthly the bank charges us 25,000 as interest. So here's the 25,000, and our non-operating income is zero. So our EBIT is the operating profit minus this 25,000 we pay as interest, which will leave us at 40,175,000. The tax we pay 5.5% of our gross profit. So the next, which is 2,266,000. So our net profit is 40,175,000 minus this 2,266,000 from the tax, which will leave us at 37,909,000. So, given all these calculations, this will guarantee a profitable investment. That our month, this is just for a month. This is the projection, the income statement for a month. Starting off with daily calculations, getting to monthly calculations. So our business is a guaranteed profit-making business.
Abaka, clap for them. Tax is for which profit? Wait, answer. The tax is for which profit?
Tax is from the operating profit.
Tax, Claudette, the tax for which profit? Tax is for which profit? Group 2, wake up. Tax is for which profit?
The tax is from the income before earning, earning before income tax.
So why did you, when you were saying expose, you said tax from the gross profit? I'm telling you what you said.
What I said.
And it's written there. 5.5 of cost per 100 GP.
That's it. You said GP is what?
They was calculated from this.
You said, what did you say?
I said gross profit. Verbal mistake.
Verbal and written mistake. All right. But concept-wise, you will understand it, and that is it. But coming here, when you are presenting an income statement, right? These are some little errors that you should not make. So you're calculating that the number of pigs that you will sell of 43 million, you will spend 2 million.
Yes, as in, we did not buy so many pigs in the beginning.
So how did you sell them for 43 million?
That's what we have. We are selling in kilos. And as 1 kilogram is 1,000. We bought the pigs and reared them and they grew. Then we had to sell. So we didn't buy many pigs to start with. But we bought 10 pigs, we bought the feet, we fed them, and then we had few workers. So we didn't have so much to spend. But now it gave us much profit because we fed them and they grew big. And one, with the food, we're buying their feed.
Where did you get the feed?
We're buying their feed.
For 2 million.
Their feed was not up to 2 million.
Somebody should ask her a question. I want you to debate about this thing. I'm going to first before I ask. And how can 10 pigs sell for 43 million? What are you talking about?
We are exporting in kilos, in kilograms.
It's slaughter pigs.
And when you slaughter 10 pigs, you can sell it for 43 million.
Joe, how many? What is the weight of one of your pigs? What is the weight of one of your pigs? Before sale.
Before sale, when it's already ready for sale.
Yeah,
When the pig is ready for sale, it's 40 kg. Some are more than.
Okay, you say you sell 1,200 kilograms per day. How many pigs do you have? 10. So, I'm still asking the question, please.
We started with 10 pigs. Now these 10 pigs, we are rearing them, they are reproducing. That is what is giving this 43 million because it's not that 43 million, not only from the 10 pigs, it's a monthly something. Now we sell. They grow now.
Okay, please. Okay, no problem. You started with 10 pigs, alright? You started with 10 pigs.
1 minute. I want that fundamentally all of you should understand how business operates, right? That's why this debate has to come in. Okay? You should not be dreaming, right? You should understand detailing. This is a good example. If we debate this well, we'll see how clear this can work or not.
And you're going to pick, when I say go, you're going to make sure you pick as many cups as possible. That's the first one. The second phase of the game, I need just 3 persons. That way, when they pick the cups here, when they're gone, they're picking the cups in 20 seconds. The number of cups you pick, you go here, and you're going to use the cups and the plates. You have just 35 seconds to build a tour. 20 seconds here, 35 seconds here to build a tour. Then I will need 5 persons per team. So 5 persons per team to dismantle the tower. This is it. You can only remove the plates with your hands. To remove any cup, you're going to be 5 of you holding these skirts. I'm not going to explain to you how you're going to do this, but you have to reason it out. got to work just for it. Qualify the place. Take your cups, let's see how many cups we have. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7. You win the last part of the game. You lose the second part of the game. Now let's see the extra cups that way. How many cups are there? So we add to see who won the first part of the game. So how many cups do we have there? The first part of the game. Plus 7, that's 21. So they won the first part of the game, they won the second part of the game, but they lost the third part of the game. Thank you very much. Hope you had fun.
The Executive Chair TV reality show.